I know if you look at a price chart, a current price chart, arithmetic scale of gold or silver, you think, oh, wow, it's just gone ballistic. I got to take profits. Okay. The bigger context is totally different than what you see on that screen. The screen looks like, yeah, I've gone ballistic compared to the price action that prevailed over the last couple of years, which is more layered. In fact, there was a period just April, May, June, July, August where gold was dead sideways. Okay, but this chart's very informative. I'm possessed by it. Okay, as a technician, this shows silver price on a logarithmic or ratio scale chart. So I've shown the period in 79 and 80 where silver, after going up for several years, went vertical. Okay. And then there's the period in 2010-11, the green arrow and the lines, where you've been going up for years, and then in the last 2 quarters, you went vertical. Okay. We've been going up for years, just like those. Okay. Not vertical, arm wrestling all the way, torturing people, monthly consolidation periods, corrections, all that stuff that goes with the normal arduous bull market. We argue that you're at the gate of going vertical. And forget momentum now. We'll get into that later, and the key trigger for this we'll get into in a second. Just looking at the price charts, a log scale. If you measure what happened in the last 6 months of that vertical move that peaked in 1980, that's the red up arrow with the 2 horizontals showing where it started and where it ended. 6 months, you went from like $8 to 50. Okay, so we mark that distance on the log scale chart there. Okay, forget that. Now let's go to the 2010-11 period, where you also went up to the $50 level. And in the last 6 months there, between the green horizontal upper line and the green horizontal lower line, you went up X amount there. Okay, we mark that with the green arrow. Now, when we take those 2 arrows, the green arrow showing the logarithmic dimension of that move, 2011, and the red arrow to the 1980 peak, and move them over to the present. At the present price, if you go vertical, and I'll give you that argument in a minute, equaling the 1980 surge, 79-80 surge, you go up to $200 or so, okay, logarithmically. And if you match the move from October 2010 to April 2011, where silver went from like 20 something to 50, silver's going over 100 to match that ratio scale over in the next handful of months. Okay, now what's going to cause this? Well, aside from the certain fundamental arguments and also the fact that silver ain't going to stop at a triple top, guys. Okay, you want to sell at 50, go be my guest. You'll be buried. Okay, the question then is, though, once we get through that silly nonsense level of 50, because frankly it is nonsense, because it's so many years ago that in real dollar terms, factoring in the degradation in the real buying power of the US dollar, remember it doubles and almost doubles in quantity every decade, so it's a junior version of the Weimar. Okay, silver would be $200 just to match the 1980 high or something, some number like that. Okay, so silver's been suppressed. Gold's way above its 2011 high, way above its 1980 high. Copper's above its 2011 high, and yet silver's supposed to stay below it. $50? Oh yeah, right. Bet on that. Anyway, we're arguing that when we're going to break out, and the key for the breakout now is not whether silver's in an uptrend or a downtrend, because it's already been going up for a couple years now, right? Okay, no question about it. Different manner of rise, but still rising constantly. What's going to cause it to go ballistic? Well, go to the next page.
Yeah, and to all my viewers and listeners, I'm looking at 2 different screens here. I have a screen with all of this information.
Okay, now here we go.
Here we go.
Let me explain what the top chart is.
Yeah, please do.
That's simply every month, where is the price of silver, divide an ounce of silver into an ounce of gold, and express it as a percent. Okay, we go back to late 2019, and you see the surge into 2020 where silver beat gold on the upside. The black line went from under 0.9% up to 1.5 something percent. So a big percent move. That's like silver went from 15 to 30 during that time, and gold went up about $600, but silver doubled. Okay, so the spread outperformed, silver outperformed gold. But since that high in actually early 2021, silver has been giving back relative value to gold. Okay, it actually dropped back under the 1% level early this year, and has since, you can see, shot up nicely now on the spread chart. Now, right now, the spread chart's above that downtrend, but we prefer that horizontal red line. This is the top chart again. Top chart
right here.
This is the spread itself, which is price versus price expressed as a percent. I want to break out over that red horizontal. That means getting the price of silver versus gold from where it is right now, which is 1.23% approximately, above 1.31%. Then that spread has a triple top breakout over a base that goes back about 2.5, 3 years.
Yep.
So it's technically important. Okay. Now, when we run momentum of the spread, which is the chart below, let's measure. What it measures is each of those monthly spread closes in relationship to a 10-month moving average. Okay. It has the same triple top, except you're at it.
We were right there.
Yeah, momentum is over to the right, is that third hit on the red line.
3.
So momentum is at its triple top breakout, which usually occurs first. Momentum almost always will break out into a new trend direction prior to price. Okay. We closed right at it the end of yesterday, the end of the month. Okay. Now, it doesn't take much to break that momentum through, and it doesn't take much to actually break the spread chart through. What does it matter? Go to the next page. I'll give you an example. To go back to the 2008 through 2011 advance in silver price versus gold, the spread was down in the 1.2% level back in 2008-9, and it went up and made a plateau for about 1.5 to 2 years. It had a flat ceiling, the red line. You went up and bumped it. Okay, it's when you closed above it. The green arrow, that was in October of 2010. Okay, make that note. Now drop down to the two charts below. These are simply price charts of silver and gold, monthly bar charts. I circled the month on price of silver and the price of gold when that spread broke out. That was October 2010. Silver was about $22, and in 6 months it was 50.
Look at that.
Okay, gold also advanced, but it didn't have anywhere near the percent gain in that period of time that silver did. Mm-hmm. So the key to telling when silver is going to accelerate versus gold, and also when silver price is going to go vertical, this occurred in 79-80, 2010 and 11. We're looking at the 2010-11 situation here, is when the spread breaks out. So
it's right now.
We're looking at the spread chart now as the next trigger to generate not just upside in silver versus gold, and upside in both of them, but silver going vertical versus gold. And probably doing what it did in 79 or doing what it did in 2010-11 in terms of percent gain. So the key trigger right now to look at is not the price charts, not whether silver goes through $50. It's a relic. The spread chart. And we're pushing up toward it as we showed on the prior page. So anyway, this is what we're pounding the table over right now. Watch the spread. It's the most important technical out there. And if you think silver and gold have been going, quote, vertical lately by looking at your arithmetic daily chart of the last year or something, you're wrong. You haven't even begun to see it yet. And I think it's about to happen because, again, momentum is back to that triple top. It ain't going to stop. And when it goes through, the spread will go through as well, in which case, set the clock. The next couple of quarters could be meteoric, and silver may it will likely end up in a new price reality rather than this $20 to $50 range it's been in for 50 years. Okay.
Right.
Copper's above that range. Gold is well above that range. Silver's about to catch up again, but it'll come down from a new reality. In other words, In both of those moves, if we further examine them, I don't have the charts here, but if you go back to that 79 to 80 surge at the tail end of that bull market that had been underway since 76 low, okay, in the last 6 months of that move, there was actually a correction in the middle of that move. And
I
no
can bring
doubt,
it up again if you want me to.
if you can, you won't be able to see that on the log scale, I don't think.
Okay.
Well, yeah, you could see it in 2008. There's an example there. You'll notice about 3 months after the green circle, where silver surged from just above 20, it surged up to over 30, okay? You had a bad month. No, the middle chart.
Middle chart right here.
The price chart. The middle one, silver, is the middle chart. That one there. 3 months later, you surged. Then you had a bad month in January of 2011, where you had a straight down month. 3 months after that spread breakout, you had a surge in price, but you had a bad month in January.
Yeah.
No doubt everybody thought, oh, that's it. It's a blow off and you're through. Then you turned, and the next 3 months, you went berserk. Okay.
Yeah,
Same thing happened in 79 to 80. There was a pause in the middle of the move, spanning about 5 to 6 weeks, where it looked like, oh, golly, it's topping. It was just taking a breath, and then it tacked on the rest. So it was the 3 months, wobble around, confuse, then get there. When you get to the new reality in silver, and it could be, my guess is it's going to at least be 100. It's quite probable, possibly could be 200. That's a new reality. No, that doesn't mean you're going to stay up there. You can have a sell-off, but you're not coming back to 50. Your sell-off might be from 200 to 125 or something. You're in a new reality on silver then. The key is participating in the move into that new reality. And I think it's not going to be one of these things where you get to casually judge it along the way, if you know what I mean.